21 Capital, the new company by Jack Mallers, Tether, Cantor Fitzgerald, SoftBank. They're starting out strong with 42,000 Bitcoin, but the SPAC hasn't gone through yet. For some people, it might be a little bit difficult to figure out what the market cap of this company even is. Is it just what CEP is, or are there additional shares once the SPAC goes through? We're going to figure all that out, and I'm going to run through some models that I've created on some evaluations of projections into the future. If this is overpriced currently, if you're buying in pre-SPAC merger, or what kind of numbers they're going to have to hit into the future to really make this evaluation make sense. Because right now they are trading at a premium of their net asset values when they become a SPAC, which will be 42,000 Bitcoin. So how it works now is if you're buying CEP, you're buying into a SPAC, a special purpose acquisition company, and you're buying a ticker that will turn into another ticker. It'll go from CEP into XXI, Roman numeral 21. And usually SPACs, when they're created, will just start out at a $10 share price. So you might see it's way higher than that now. And that's because it's getting evaluated by the market for the future projection of what the market will value XXI at, hopefully. So let's first go over what the actual market cap of 21 Capital will be post-merger. So right now, CEP stock closed at $31.50, and there's 10.3 million shares of the SPAC shares, the CEP shares, which means that the market cap of that is 324 million. So if you were just evaluating that, and this company's going to have 42,000 Bitcoin, you would say, wow, this is incredibly undervalued. However, all those SPAC shares actually post-merge will only account for 2.7% of all of the shares outstanding, the vast majority of them going to Bitfinex, going to Tether, going to SoftBank, and some to the convertible bondholders for some of the money's been raised there as well. So the actual market cap for this evaluation currently with the shareholders of the SPAC, they're evaluating this company at $12 billion, not 324 million, unfortunately. So it's a lot more value in that company than that. So currently prices of Bitcoin around 95,000. So if they had 42,000 Bitcoin, that's going to give them around $4 billion of BTC. Of course, that's why it looked like such a good deal at 324 million market cap. However, at a $12 billion market cap, that's a premium to its net asset value of basically around 3 times, which means that essentially one way to look at this from a very kind of simplified view would be that you're paying a premium to the Bitcoin holdings 3 times as much. So you're putting in a lot of projection that they're going to be able to acquire Bitcoin per share and increase that up for you. And right now it's essentially like buying, well, one way you could look at it is it's like buying a $95,000 Bitcoin at $285,000. Now, it's not exactly like that because you're not buying a Bitcoin, you're buying a company, you're buying into a company. And what's really funny about this is people make the comparison of why would I buy MSTR? Why would I buy XXI? Why would I buy Mara? Why would I buy any Bitcoin treasury company, Semler, Metaplanet, any of this? Because they're companies. They're not Bitcoin, just as Apple is not the cash that they hold or the cash, their net asset value, right? They're companies that are acquiring more cash into the future. So you're buying into this company, expecting it to acquire more Bitcoin over time, and for that Bitcoin to be for that 3x premium to potentially make sense. Now, right now, MSTR has a 2 times premium to its net asset value. So its shares are trading at a multiple of net asset of around 2. So the question here is, does XXI, does 21 Capital have more potential to grow than Strategy? Does it deserve a 3 times premium? So if CEP traded at a 1 times to its net asset value of its 42,000 Bitcoin, the price per share would be $10.46. Right now, they're $31.50. So of course there's this big premium here. So what I decided to do here to figure out if it made sense to have a 3x multiple was to look at the history of MSTR and be able to track their growth of their Bitcoin acquisition. And the reason I did this is because this is the data we have. This is what we could theoretically see a growth story like MSTR for 21 Capital. So what we're looking at here is all of Strategy's Bitcoin buys throughout their entire history when they started buying. And what I did was I decided to look at Strategy when they had the same amount of Bitcoin holdings, right? We're supposed to price all this stuff in Bitcoin. So December 4th of 2020, they had approximately 40,824 Bitcoin. So a little bit less, 1,200 less, but it's the best kind of comparison because they did a massive buy after that and brought their holdings up to 70,000. So what I've decided to do to kind of get an average is see how much Bitcoin they've acquired and basically calculate the entire time that it's taken them to acquire, go from 40,800 to the now 534,000, I believe they have. 538,000 Bitcoin. So that's taken them 53 months. And basically I've calculated a compound annual growth rate of Bitcoin acquisition over time as a future possible projection of what 21 Capital could do. Now, of course, the Bitcoin treasury company market has changed. Bitcoin's price has changed. And you can see we've gone through a bear market and there was acquisitions throughout, but you can actually see there was a lot more acquisitions near the top with Strategy and a lot less during the bear market where it would have been better for them to actually acquire it. And they have a lot more here closer to the top as well and here as well. So you can kind of get, I think the longer history we have and the more purchases we have, I think the better sort of average we could get of what a company could do with a 40,000 Bitcoin balance sheet. So the other thing here too is the market cap of, like, if CEP turned into 21 right now, the market cap is 12 billion. Now, Strategy, it took a lot longer for them to get to a market cap of 12 billion. They had a lot more Bitcoin on their balance sheet. And you know, they were at like 4 billion down here when they had like 150,000 Bitcoin because they were trading so much closer to their net asset value and Bitcoin's price was so much lower. So again, this is going to be a hard thing to compare. I'm just giving you all that prerequisite so that you don't all of a sudden think that 21 Capital is going to be able to grow its Bitcoin holdings as fast as Strategy has, because the market is significantly different at this point. With all of that said, this is some information that I have. If you were to take $95,000 and you buy one Bitcoin today, or if you buy $95,000 of CEP shares and everything goes well with the SPAC and whatnot, and it's valued at its current values and everything is the equation that I'm doing here, how long would it take for you to get one Bitcoin per share? How long at a Bitcoin acquisition rate would it take for you to have the same amount of Bitcoin ownership in quotation marks through an instrument like CEP or 21 Capital than if you had just bought in Bitcoin today? Now, this isn't factoring in a growth rate of the value of the shares or the value of the Bitcoin, because the value of the Bitcoin would stay consistent. We're talking about the compound annual growth rate of acquiring more Bitcoin by the company 21 Capital. So here's just kind of an example of Strategy. They, in June of 2023, they had a market cap of around 4 billion. They had 152,800 Bitcoin on their balance sheet. And since then, they've been able to grow their balance of Bitcoin to 538,000. And this is essentially a Bitcoin acquisition CAGR of 84%. So if CEP had a compound annual growth rate of Bitcoin acquisition of 84%, it would take approximately 1 year and 9.6 months to make you acquire the same amount of Bitcoin exposure that you would have if you just buy Bitcoin today instead of CEP. Now, here are some other potentials, right? I've just punched in some more equations here for different rates of compound annual growth rate of Bitcoin acquisition. One at 50%, 84% is very high, right? MSTR is now saying that they're aiming for 15% per year of Bitcoin yield. And I think that actually they'll probably go higher. But nonetheless, at 50% CAGR of Bitcoin acquisition, or maybe I should just say Bitcoin yield at this point, it's quite a mouthful. It takes 2 years and 8.5 months. At 25% acquisition of Bitcoin per year, it's going to take roughly around 5 years. And at 15%, it's going to take roughly around 8 years. So how you have to evaluate how long am I willing to wait to acquire the same amount of Bitcoin exposure that I could have today, if that's what you value, right? If we take Jack Mallers for his word and the talks that he's been on recently, talking about we're looking at Bitcoin yield, we're evaluating everything in Bitcoin, we're a Bitcoin centered company, all of this. And if you don't factor in their potential to make an additional sort of profitable business within this through Bitcoin education or Bitcoin lending, if it's really just about acquiring Bitcoin, how long could it take at these percentage rates of acquiring Bitcoin for you to have the same amount of Bitcoin exposure from the just buying Bitcoin or buying CEP, right? At these rates, it could take quite a lot of time. Now, this multiple to its net asset value is going to shift around like crazy. And it might make sense to buy some of this if that multiple goes really, really close to its net asset value, because they will grow their Bitcoin per share, even with share dilution, because they have access to capital markets and debt, and they can issue equity, which is diluting, but they're able to acquire more Bitcoin because they have that premium. So it's going to affect your share price, and your share price, I haven't even talked about really share price, the effect of share price through this, but there's going to be all sorts of intentional manipulation by the company to compress the mNAV, because at a 3 times multiple, they're able to print $3 bills at $1. Every share they issue allows them to acquire more Bitcoin than for each shareholder, even with the added dilution. So they're going to do that. That's the playbook. They're going to dilute their shareholders like crazy in an attempt to acquire Bitcoin, and that Bitcoin's going to grow in value over time, and that's going to raise their standings, their net asset values, their ability to borrow, the rates they can get for borrowing, the convertible bonds they can issue, the other instruments they can issue. That's the whole strategy. It's a strategy through arbitrage, through debt, through financing fiat debt instruments, and it's an equity story of being able to sell equity and buy an underlying asset that outperforms. So on top of this Bitcoin acquisition number that I've gotten, it really doesn't account for the share dilution. So there has been a huge amount of share dilution in strategy. So even though the rate of growth of Bitcoin, right? This isn't accounting for the rate of growth of shares. Now, the Bitcoin per share, the amount of Bitcoin is outpacing in strategy. It's outpacing the amount of share dilution in a percentage ways because of how effective the strategy is. But this is just a pure calculation without the addition of that dilution number. These numbers are actually a lot more favorable without the dilution. They're a lot less favorable. So it will actually take a lot more time for you to get back your initial Bitcoin exposure potential if you buy this compared to buying Bitcoin directly. Plus, you're running the risk of allowing them to hold the custody, of them to potentially if they went bankrupt, if their strategy blew up, if the debt exploded, if something happened here, right, the debt holders are going to become equity holders, and the equity holders are basically going to get wiped out. That's what happens in a liquidation event. Not trying to share any unnecessary fear here, but this is just what would happen in that situation. This is only accounting for growth of Bitcoin and Bitcoin exposure potential. However, this is in its most optimal light because it's not factoring in share dilution, which makes these numbers significantly worse, and it takes significantly longer for you to get the same amount of Bitcoin exposure that you could get today from just buying Bitcoin. If we look, if we see this and we think, okay, well, I believe they could grow their Bitcoin holdings at 84% per year. It's only going to take 1.8 years, not including dilution, for me to get the same exposure. And then anything beyond that is additional exposure to Bitcoin because I'm investing in a company that's acquiring Bitcoin, even with dilution, and they're accreting that Bitcoin per share to me as a shareholder. Then I benefit beyond that 1.8 years, beyond what I would have if I had just bought in Bitcoin, right? That's the idea of buying into in investing in a company that is acquiring an asset. It's always about its future potential growth and acquiring assets that you benefit from for the valuation of that company to go up in value. I'm hoping that this brings a little bit of light to what you're actually buying into and what you should be expecting. If you expect this to outperform what Strategy was able to do in its basically its lifetime of buying Bitcoin, if you think that Mahlers is going to be able to acquire Bitcoin faster with less share dilution, then you might have a more rosy, optimistic picture. But if you think that maybe there's going to be some competition here, maybe Strategy is already the most liquid in this market, and how much can they pull from that? How much can they pull from all the other equity plays out there? There's a lot of things to consider here, and I hope that this was just a little bit of insight into what it would potentially take for you to regain your exposure to Bitcoin over time with an asset like this. It'll be very interesting to see what happens again. I've already made, my last video was about this company as well. I think I will continue following up on this, continue doing deeper dives and some math and analyzing this a little bit and figuring out what multiple it should have over time. I think we can only really figure out once it starts acquiring it and once it starts giving some guidance of what it thinks it will be able to acquire over time. So right now, there's a lot of things up in the air and there's a lot of money being thrown at this. And there's definitely a lot of people that do not realize what the actual true market cap of this company is, or what the multiple is, or how many years it would take to get the same exposure to Bitcoin. So hopefully this was helpful to you. If it was, give it a like or whatever. And my name's Forrest Hoddle. I'm on X and Noster. Follow this channel, follow me there. And if you need some help with your Bitcoin holdings, I do Bitcoin coaching. I can help you with security, best practices, any kind of Bitcoin questions you have. You can book me for a one-on-one in the link in the description. If you want to get some Bitcoin directly, I recommend checking out Bitcoin Well. And if you need to protect your seed phrase for future generations, I recommend checking out the Stampseed kit and using my coupon code, which is BTC not crypto 15 for 15% off. Thanks everyone for watching. We'll see you on the next episode of Bitcoin Not Crypto.